We would now begin with our next panel discussion on real estate industry. Current real estate financing trends and the significance of real estate in investment portfolio of HNI and ultra HNI and legal documentation of property transactions. We have on the panel with us Mr. Ajay Sharma, Head, Consulting and Valuation Services, HDFC Realty Limited. Mr. Arvind Nandan, Real Estate Expert. Mr. Neeraj Pruthi, Senior Vice President, Realty, iFin Service Private Limited. Mr. Paresh Karya, Director, Easy to Own Estate. Mr. Vivek Sharma, Vice President, Sales, Ahuja Constructions. I would reiterate the format of the panel discussion would be each panelist speaker would speak on the panel topic for 5 minutes each, followed by the open forum amongst the panelists, followed by the question-answer session amongst the audience. Thank you. Mr. Arvind Nandan would be the moderator in the real estate panel.
Thank you very much for that. Is it audible? Well, real estate is such a subject, whether you treat it as an asset class, whether you treat it as an investment arena, that it's practically almost impossible to comprehend all parts of it or all aspects of it. But still, there are patterns, between all the myriad patterns and the spectrum of different choices, there is definitely a pattern, and I believe through this discussion we can somehow decipher some of those, if not all, going forward in the next half an hour, 45 minutes, or whatever it takes. Before I get into this, I am reminded of a very favorite shairi of mine, so people who understand Hindi or Urdu will probably comprehend it and will try and translate it for the others. It says, it goes like this: निकल जाए दम गम इतना भी नहीं, निकल जाए दम गम इतना भी नहीं, वक्त मुश्किल है तो क्या बेरहम भी नहीं. What it means is, the times might be difficult. It appears that the times are difficult. It appears that they'll practically kill us, they'll completely demolish us. But it's important to realize that times are difficult, but they're usually not heartless, they're usually not ruthless. One has to be able to understand the times. I think it always applies to the cycle that we are in the real estate sector. We always feel real estate is a difficult asset class. It's practically impossible to comprehend it. But like I was saying earlier, with a little bit of application of mind, with a little bit of application of thought, there are certain patterns and certain intelligent decisions that can definitely be taken out. So let me start without much ado further. Let me start taking our panelists on board and taking their views. Ajay, maybe let me start with you. First of all, as an asset class, as a motherhood statement, let me say, as an asset class, how would you define real estate, and how would you actually say that there are things which can be understood at the macro level at least?
Thanks, Nandan. Just to go into the definition of real estate, there's a lot of confusion many times, what is an estate and what's a real estate, and so on and so forth. So anything practically that is immovable, and grounded is real estate. It's as simple as that. And there are various aspects to this, as we all know, and of course the forum which is gathered here, most of them know, there's a yield generating real estate, there's a high value real estate, and so on and so forth. Coming to why it's a difficult asset class, as you started talking, is because of the various regulatory frameworks that are there, and which differ from state to state, region to region. Also, the perspective of taxations on these asset classes, and more importantly is the markets themselves and the behavior of the buyers in these markets. I'm quite sure, all the wealth managers when they're speaking to their clients, and when the clients want to invest into various regions, a lot of them will come and tell, we don't understand that market at all. For example, anyone investing into Bombay for sure knows that Delhi NCR is a googly for them, completely. So, the complexity arises because of the kind of differences that the market itself behaves in. So that's one of the key aspects, and and that's where I think the role of wealth managers is very important, especially for high net worth individuals, and even in fact going forward, I'd say even the developers are taking a lot of interest in educating their own consumers about why a certain market behaves. For example, even in residential real estate, I'm quite sure my fellow panelists will agree, is that within the same market, you can have completely two different price points. And for a consumer, it's like, why is it so different? I'm staying in the same location, but why is it so different? So I think a lot of education of the consumer has to happen, depending on what the product is, especially consumer. That's more important. So a lot of developers go through, and in fact, in my interaction with developers as an advisory person, they come back and tell me one of the key questions in the marketing dockets. They go through the specifications and say that, no, all the projects have the same specifications, so why the price difference? Why should I get into this? So these kind of questions a lot of people ask. I'm quite sure a lot of your own clients keep asking, and we need to keep educating them about this. So it's a long-run process, and we need to just get there slowly.
Absolutely true. But I think what you said brings to the fore some very important aspects. Like it's an asset class that's not easily understood. Things are even more complicated because sometimes what applies in one place doesn't apply in another place. What applies in two places at the same time doesn't apply in those two places at another time. So things change with time, things change with place. One of the critical aspects of real estate is that it is built on one fixed component, and that's land. Like other assets, whether they are automobiles or any other possessions or assets that you have, real estate is entirely dependent, or to a great extent dependent on land. To understand real estate, I believe understanding the behavior of land and the way the asset class moves, its values change with land is important. Let me bring in Paresh here. Paresh, how do you sort of break real estate into easily understandable sub-asset classes?
Yeah. So I would just like to take it forward from there. Yeah. So I would just like to take it forward from what Ajay and Arvind has said. There is a lot of confusion with regard to real estate, and confusion is with the customers themselves, with the people who are investing in real estate. So to understand it better, let's break it down into various components. First of all, we need to understand why a person is buying real estate. Is it buying it for his own use, or is it buying it from investment? When you are buying for your end use, the way to look at real estate is different. When you are looking at it from an investment point of view, the way to look at it is different. And this is where the confusion comes in. We have seen customers typically, even when they are buying a property for investment, they will evaluate it as if they are going to buy it, go and stay it over there. Now, that is not the case. So this is where we need to, wealth managers or advisors need to come in and help the customers in understanding, helping the customers to realize what exactly do they need. Then again, when we look at it from an investment point of view, we need to realize that why is one investing in real estate? Is it one investing for regular return, or is it one investing for capital appreciation? Now, if one is looking for a regular return, then a commercial property which gives lease rentals makes more sense. But we have come across customers who wants to buy residential property for rental income, which will give a return of just 2 or 3%. So typically a residential property one should invest if one is looking for capital appreciation. Another confusion which is there in a customer's mind is whether he should buy a property which is just launched, which is just getting, off the pad, or should one buy a property which is ready to move in. Now, typically a ready to move in property is suitable for someone who is looking at end use. A property which is just getting launched is the one which will give you a return, because there is an execution risk involved in it. And if a customer is ready to take an execution risk, he will get a higher return. So we have come across investors who still come and ask us for ready to move in property as an investment option. So this is where, we have, people like us have a role to play. We need to advise, we need to sit back with the customers, we need to educate them, ask them questions, and find out what help the customers in realizing what actually they need, and accordingly advise the customers.
Very true. Actually, where you actually ended is the point where we should practically start and go to the left side. Let me go to Vivek first. Vivek, you come from what is probably a sunrise industry in the country, definitely. Let me speak about how technology, particularly, specifically that related to infrastructure, impacts real estate and value creation in this particular asset class. Would you have some preliminary thoughts on that? Because taking further from there, I'll want to come to Neeraj and be a little more specific on real estate then again.
Right. I'll just, hi. This is a post-session lunch session, so I guess it's slightly heavy on everybody. And let me just take you briefly back into time. Look at Japan. Look at a brand called Sony. I hope some of you might have read this book by Akio Morita, Making of Sony. Go through the book if you haven't, and look at how this brand was. It's an iconic brand today. And look at how the brand was created into a pre-Second World War Japan. And this was purely created, with a couple of fundamentals which were kept in place. Iconic brand created, if you remember, there was a song in Hindi in the 60s, Mera Juta Hai Japani. Japani was actually not, it was a derogatory term at that point of time. We used to speak of Japan, jaise ki abhi, means a couple of years back, we used to speak of, made in China. Made in China was everything wrong was made in China. But Japan today is actually iconic. Same is happening with, made in China. China is actually becoming iconic as a country. And look at, I guess, if we need to replicate each of these things in India, and we need to take pride in, made in India, what Narendra Modi might have said a couple of days back, make in India. So, means all of us are speaking of investment, coming to real estate, 56% of, I was hearing one of your panelists, speaking about 56% of an investment of a person is in real estate. So if we look at it, more than 50% of the investment a person is doing is in real estate. We are also talking of 2022, by the time there would be a house for all. I'll take you to something, I think everybody needs a house today. Means there would be absolutely nobody in this country who doesn't need a home over his head. 1995, just go back 20 years. And this was about, telephony, mobile operations. Two gentlemen sitting in Singapore, betted $100 on telephony. The one said, Ki India, how many connections would there be in India by 2005? One said 1 crore connections, the other said 5 crore connections. And ultimately, both of them lost the bet, $100. Because at the end of 2005, we were 40 crore customers. This is of a product. Telephony is not a product which is actually a need. Was not a need at that point of time, is a need today. Real estate definitely is a need. And by 2022, if we need to, provide housing to everybody, coming back to your question, what he was putting at, technology, if we come to technology and if we come to infrastructure as a sector and as an investment destination, look at how technology can improve us. I think today we started the conference at 11 o'clock. We were supposed to start the conference at 10 o'clock. Why? There might be, variety of reasons people would give. Late ho gaya, there was a traffic bottleneck, the infrastructure in Bombay sucks. These are the couple of reasons you might give. Or generally it's fashionable to come late, and to start a conference in time. This is the same symptomatic symptom which is there across the country. Even as far as infrastructure projects, if you look at infrastructure projects, the deliverance today, dotted timeline deliverance, how many developers would be giving a dotted timeline deliverance? Barely few. You can just name a couple of developers who are giving a dotted timeline deliverance. If we can take it, means if we can, I believe a host of measures are being done by the government. In terms of, there would be some which are visible and there are some in the pipeline. In fact, there is a conference which is happening today in Delhi, which is being chaired by Mr. Narendra Modi himself, on the housing and the real estate sector. I believe, once we have a single window clearance coming in, once we have the regulatory issues sorted out, once we don't have 72 regulations to get through, and if we are able to do a timely deliverance, and if we are able to, give something which is better compared to what we have promised, I think ultimately what matters is real estate as a class is the highest involvement product which you can actually give to any consumer. And if we are able to deliver, and if we are able to, better on the products, rather than, putting advertisements with, say, iconic models on the advertisements, if we are able to just give a product which is superior compared to the others, and if we are able to deliver on the timelines, by virtue of technology, what prevents us today from, always continually following the same way of manufacturing a building? What is it that is preventing? Means we would have advanced, leaps and frogs in the last 20, 30, 40 years as far as civil engineering is concerned. But still we are manufacturing the same way. A building is being manufactured the same way. Are there ways and means of, changing it and possibly not recruiting high-cost architectural firms and rather doing the job in-house in a process-driven process-driven methodology? Yes, there are ways and means of doing it. I think technology again has a very important role. Government regulations have a very important role to play overall. And I think these are the factors which will contribute to a real estate growth in the next couple of years.
Thanks. I think you covered much more than what we had anticipated, but that's usually more than welcome. Neeraj, with you, I'll start a new cycle of discussion now, and we'll probably go around taking that up. We've discovered, we've spoken about different components in real estate. We've spoken about how value creation happens, and he's given a very good lowdown on how technology is also an enabler of creating value in real estate. The next thing is, and more relevant to the current audience and our subject here is, once you understand all the different constituents of a value proposition, how do you start analyzing the future potential, or particularly from somebody who treats it as an asset class? How does somebody start understanding what value will come in future, particularly from, let's say, an capital appreciation point of view, or from a returns perspective? What does one do, what training does one need to be able to understand the future potential that a real estate asset class holds? Take any sub-asset class, maybe residential or commercial or something else, maybe even land. How does one figure out what should be the best way to assess the value going into the future? Any preliminary thoughts on that are welcome, and probably we'll take the same thing further up.
Thanks, Arvind. I will start from the point, like you already mentioned, what exactly is real estate? Okay, so real estate is basically the asset class which is actually in real. Okay, all other asset class which you talk about, equity, debt, all other, these are not real. There is asset class which you actually hold. Okay, there is a derived value into that. Okay, be it residential, be it commercial, whatever kind of whether you hold land, whether you hold farmland, there is some derived value you can unlock into that, and you see some actual value other than gold. So there are two asset class in the world, probably in India, which are wealth creator. One is equity, another one is real estate. As somebody already mentioned, that about 56% of Indian assets or savings are diverted into real estate. Okay, and about 14% into bank deposits and gold and other asset class. So about 70% of the Indian assets are diverted into, which is real assets. Okay. Now, coming to your point, like you mentioned that what exactly one should look into, how to unlock, how to see the potential of that particular property, how would that generate return on that? I think the most important point to see is the location, A, because if you talk about property, it's always about location, 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 which is the prime and I think the most important factor in choosing and maybe evaluating real estate. When you talk about location, locations cover each and everything. Okay, it covers your entertainment destination. It talks about your educational institutes. It talks about infrastructure. It talks about all basic amenities. Because if you're going to develop something, and all these things are basic, And if you're not providing these basic amenities, you won't be able to unlock the value, and you may not be able to visualize the probably future value of that. Now, how do one see those things? Okay, one has to be little smart in looking at all these opportunities. Now, if you look at now, after May, the new BJP government came in, lot of talks have been talked about now, new smart cities. Okay, now once the smart cities will be developed, okay, so a lot of infrastructure activity would happen over there. So one need to keep a close eye on these things, where probably the smart cities are getting developed, because their residential activity would happen, infrastructure activity would happen. There are 2-3 important infrastructure activities are going on, like Delhi-Mumbai industrial corridor is happening, Eastern-Western corridor is happening from Ludhiana to Kolkata. Now, once this infrastructure activities happens, a lot of, related township, new cities, infrastructure-related activity would happen, like it is an industrial corridor, a lot of, storage or warehousing requirements would be there. So one has to be little, broad-minded. He should be able to take little risk in analyzing, because if you're not taking risk, if you're going in a mature market, if you're taking something in Mumbai, then probably it would take you market-related return. So you have to go to suburbs, or maybe a little, I think, calculated risk you have to take in analyzing those things. Then only you'll be able to unlock the, maybe get the future value out of that.
Sure. So I think you pointed at what all needs to be borne in mind before you make an investment, right? That's precisely understood. And location, the term which is probably a little cliched by now, because everybody says location, location. You've tried to decode it for us, actually saying, look at the infrastructure potential, look at what's happening in future. Paresh, there is something related to that, and I believe it's absolutely critical, because I believe in the dictum that a good foresight doesn't come without a good hindsight, right? I mean, you can do all calculations on an Excel sheet or on paper, but if you haven't had the wisdom of looking back at what's happened in the past, if you don't have the knowledge of history, your calculations and Excel sheets can still go very horribly wrong. If I were to take you back a little, and particularly, from the point of view of decoding concepts in real estate, so that they can be applied with wisdom to the future value assessment or the future understanding of real estate valuation, what trends have you found of significance, particularly things which could impart a bit of learning for, let's say, a value assessor in real estate, or somebody who wants to understand the trends that as they may occur in the future? Are there certain specific takeaways that you have? Just to add one more rider, we are currently living in a world where things are becoming a little more puzzling. We've heard that Europe is going through a deflationary economy now. And we've heard that the European Commercial Bank is actually now making the interest rates negative, which is, a tricky and interesting phenomenon. Are there lessons in the past which tell us how to put the economic factors together, how to put the real estate cycles together, and draw some conclusions from there? All yours.
Exactly. Now, it is very important. You cannot, if you want to know what the future, you need to go and delve into the past. And there are lots of examples of how, things have unfolded in the past, how they have benefited the real estate industry, and the same things are likely to happen into the future. The best example I can give is that of BKC. We all know what was BKC 20 years back. It was just a marshy land. And today, probably it is one of the most expensive commercial real estate in the country. So we have seen how BKC has developed, how MMRDA took the initiative to plan and shift the central business district from South Mumbai to central Mumbai. And now we have seen what are the rates prevailing in BKC. There are a lot of residential development also taking place in and around BKC, and the rates in that region is, more than what you have in South Mumbai today. So similarly, using the same analogy, you can see how Wadala is developing. Same thing which happened to BKC is currently happening with Wadala. Again, it is being planned and developed by MMRDA. All the infrastructure and connectivity initiatives are converging at Wadala. If you see the Eastern Freeway, which is again developed by MMRDS passing through Wadala, the monorail is again going through Wadala, there is commercial, etc., going to come up. So you can see the same kind of development will take place, and you will see appreciation to taking place in future. So you can apply all this, things and try to analyze what will happen in the future. Other thing I would like to say is when you are, trying to identify a location for investment, let's say when you are looking for real estate for investment, the methodology is very similar to when you are trying to identify a stock for investment in equity. You can have a top-down approach or a bottom-up approach. The factors are similar. You need to see what is the future. You need to see how things are going to unfold. You need to see how the connectivity, etc., is going to come into the place. And one of the factors, apart from location, which one should look at to identify emerging, investment opportunities is the economic activity happening in the region and the employment opportunity. We have seen, like again, for example, in BKC, today, because there are so many office spaces in BKC, there are micro markets around BKC like, Kalina, Kurla, Ghatkopar, Chimbur, etc. are developing. Because once people move into these areas where there is employment opportunity, there is going to be demand for residences in and around those places. We have seen that happening with Hinjewadi in Pune. Hinjewadi is an IT park, and last 3-4 years, we have seen huge residential development taking place over there because there are hundreds and thousands of people working in the IT park, and there were no residential available. So these are some of the factors, nowadays economic activity, employment generation has become an important factor to identify emerging investment opportunities.
Absolutely, absolutely. Well, I'll take the same point forward, come to you, Ajay. I think he touched upon something in between, about economic drivers. For anybody who's trying to look at real estate or understand it as an asset class, it's absolutely important to understand two things. One, you can't create real estate or real estate value by doing construction. Construction is just not the answer to creating real estate. Unless there is an economic driver, a growth engine in place, no real estate value creation takes place. So